Hope you're having a very good day. My name is Owen McCafferty. This is the third segment in our webcast series on technology as it relates to veterinary medicine, dentistry, and dermatology. This is the third take of this last segment because my technology failed me. What occurred while we were having a short narrative on the third segment, the phone system rang through and shut off the camera. So you can see how the considerations for technology is wonderful as the utilization of things like smart telephones that can use the camera feature is. It can come to an embarrassing and disappointing resolution. So with that in mind, I want to say thank you, Professional Fusion, for allowing me to bring these narratives to you. And I'd like to focus in on the third segment of our discussion on technology. If you remember in the other sections, we were talking about the initial cost, both direct and indirect, the cost of educating, the cost of training, the difficulties that occur with determination if the purchase of the technology is really going to make money or is it going to cost money. We talked about the interaction that existed between staff and technology and what some of the challenges would be. In this segment, I'd like to work into the last considerations that you would have. And they would include things like, number one, updates, number two, early adoption and what happens in the early adopters, and then finally, runway, the pathway that's needed in order to gain advantage. So I'd like to start out with updates. Whenever you buy a piece of equipment, a software, a tool that's going to be used that has a technology base to it, you have to expect, not necessarily budget, because sometimes you just don't know when or how, but you have to expect that that technology is going to be displaced and become either redundant or obsolete. With that in mind, you have to not be surprised when you're building into your fixed and variable costs, as well as the profit, a separate fund, if you will, a replenishment fund for economically acquiring additional technology. When that technology becomes obsolete, most of you understand what I'm making reference to, be it in laboratory diagnostics, in laboratory utilization, in professional equipment, in computerized equipment for business applications, for communications, even for something as basic as a telephone system. One that I can just point to right now, I had to take separate takes on it because the phone was ringing. We all fight the technology. It's a very magical thing, but it takes time. So as a result of that, there are going to be situations where there's going to be updates that are needed. And the updates could be from the existing equipment with nothing more than a freshening up from the software. It could mean a complete abandonment of the technology and a refocusing of the technology towards something that is new and improved. And hold on to your seats, because when you hear new and improved, that also means it's going to need more training and it's going to need probably a higher cost, new financing, and the ability to re-educate your patient or client base, as the case may be, as to why this new and improved feature is so much better than that which was. And sometimes you have to sell yourself and your staff before you can even articulate what the benefits would be to the patient base or client base. So with that in mind, the updates and the requirements and the upgrades become a very important part of the feature. Another part of technology that I think a lot of people forget about is that early adopters usually have spears in the chest and arrows in the back. They're being attacked by a variety of different sources. So the early adopters not only fight the technology, but also the naysayers that exist either in their practice or their client or patient base. Or sometimes it's their colleagues. The colleagues could even try to trivialize that which you're doing by discrediting you. And we all know and have heard it, or we've heard other people tell us what people say behind our backs, that when you're trying to do the best you can, and gosh darn it, there's always a detractor out there saying that although they don't have the technology, they certainly don't think that it's worthwhile for you to have it. And that becomes a difficult thing. So trying to recover from all of that is somewhat of a challenge. And then finally, you got to ask yourself, how long of a runway, as my friends in private equity or investment banking may make reference to, is there going to be required until there is broad range, long-term acceptance in the community on the technology that you've acquired? Now, I can think of specifically this occurring in accounting, where you try the newest and the best, and you think it's going to be phenomenal. I can tell you right now, I can think of artificial intelligence. The runway for artificial intelligence goes back to 1946. And I think it's off the ground now, but I think also those wheels could be coming back and touching the pavement from time to time. So the runway to get up to 10, 15,000 feet in acquiring new technology could be longer in terms of the acceptance within your profession for the technology, as well as the patient and client base. Telemedicine is something that I can readily bring to mind. Boy, we hear so much about telemedicine, especially in the pandemic period of time, and it's starting to take some legs, thankfully through video applications, but telemedicine has had a lot of difficulties. Remember, we talked about the profession. Well, the practice boards don't necessarily fall in love with new technology overnight. The patient base or the client base may not be as enthralled with the idea upfront, and they're used to actually seeing you, watching you lay hands instead of the third-party viewpoint. And I can even think right now that I deal with a world-famous hospital here in Jacksonville, Florida, and they will offer the video portion, which is basically telemedicine. And I ask them, well, is that going to be the same charge? And they'll say, well, why do you worry about it? Insurance. And I go, well, because insurance is ultimately paid for by me. And they'll say, well, of course it's the same charge. And I'll say, well, I'd rather be in the presence of the provider than I would be away from the provider, because you never know what a person can pick up that the technology may not. So I'm just admitting one of my own prejudices as I receive a technology difference from physically being with the provider. So that runway in the technology and the acceptance, not only by your patients and clients, but also by your colleagues and the practice boards and God knows who else could be a long way off. So you're buying this technology, you're being a forefronter, you're a pioneer, you don't care about the spears in the chest and the arrows in the back. You're just going to do it because, gosh darn it, you want to. But better budget because it's going to take some time. Technology itself is so important. It is a mainstay. It allows me as a professional to always stay engaged and in love with my profession. But technology does have some drawbacks, and you have to think about it quite honestly. And there's one element in the runway that I forgot to mention, and that is how long it takes from the point of implementation to the point of profit, especially if you're deciding as you become a seasoned professional that you may wish to sell the practice to somebody else. Now keep in mind, most practices are being purchased. They allege value, but it's not really a value determination. It's a pricing determination for negotiation. And that is the EBITDA, the earnings before interest, taxes, depreciation, and amortization. If you buy new technology, but the new technology costs you from training and lack of efficiency and lack of acceptance, your EBITDA could be inadvertently hurt. Why add a technology if you know that you will be selling that asset, your practice, in a short period of time before you had the chance to appropriately take advantage of the opportunity for profit? This last segment is probably one of the most important segments, and that is timing. Is it truly appropriate for you to be adding a new technology and making sure that everything becomes implemented in practice? Is it destroying your EBITDA? Is it a promise of EBITDA to come, like something out of a Dickens novel? Or is it something that really can be turned into an advantage and improve the earnings that the practice is to generate and the price that you would eventually get in the sale? Throwing these things out, if you will, it's an examination of conscience, and you should be asking yourself pretty much these things at every moment when you decide, is technology right for me? Well, with that in mind, this is Owen McCafferty. I want to say thank you very much. You know how I love to have these webcast discussions because it forces me to even do an examination of conscience myself and think about some of the things that I've done, some of the decisions that I've made in order to come up with appropriate technology that's implemented. Saying that, I am a technology junkie. I readily admit it, and I will not stop. I'm constantly striving, seeking, and finding. And I can assure you, I will not yield. So this is Owen McCafferty. I want to say thank you very much, and we'll talk to you in a bit. Bye-bye.